Today, we will learn to trade rallying markets with full top-down analysis. However, I will also teach you an alternative and relaxed way of trading for all the beginner traders. If you are ready, let's do this. Let's talk about how to find the best setups before they actually happen, and how to spot those great price action points where we can take trades confidently. For example, when you look at this chart, what do you think is the best setup? What is the first thing that catches your eye here? For me, when I take a step back and look at this chart overall, I would say a 2-hour setup with a limit order looks like a solid trade idea. This would be the setup I would personally consider taking. But how I really made the decision on this one? The first thing that jumps out at me is this large multi-imbalance area. This kind of imbalances is usually one of the easiest way to spot potential entries in the market. Then, if you take a look over on the left side of the chart, you will notice a very strong support and resistance flip zone. Price has rejected this level several times in the past, showing that it's a really reactive area. Finally, take a look at this inner liquidity level right here. This is what we call as inducement. Inducement is basically the fuel behind the price before it makes a big move. Now, when you combine these inducement zones with other imbalances and support and resistance flip locations like this one here, that is when you start getting some really clean and high probability trade setups. One of the best point of interest, the POI areas. So, the ideal move we would expect here something like this. Price moves down first, sweeps that inner liquidity as inducement, taps onto a large multi-imbalance area along with the support and resistance flips, and then rallies up to take out the previous day's high and even the previous week's high. That is the kind of setup that looks absolutely perfect on paper. A+++ setups. However, what actually happened here a little bit different. Price never put back into our entry zone at all. Instead, it just went straight up and hit the targets without giving us any entry opportunity. Now that brings us to the important part. How do we deal with trades like this one before they happen? First of all, if you look closely, you will notice that the price starts making higher highs inside the structure, which means buyers are still control here. At this point, you got a decision to make. You can split your orders into two parts, using half your risk on this inner breakout and setting up another limit order at your original, the ideal position. Because in my opinion, there's a still good chance the price will pull back into that original trade area. This setup would be a really smart move to use. This is what we call order management. Your second option is to use what we call as ladder orders, risking around 0.3 R on each trade, but going for a bigger reward on every setup. This method is known as a ladder trading in order management. It is another classic way to split your entries, especially if you are not totally confident with your first entry. And lastly, one of the most common order management strategies is creating an average entry price, something I teach in my masterclass as the yo-yo entry style. This is actually one of my favorite techniques for managing trade entries. With this style, you almost never miss any entries. But keep in mind, your profit can be a bit smaller or larger depending on where your average entry ends up. So now, you've just seen 4 different entry models and order management techniques around inducement areas. But here is the question, what do all of them have in common? No matter which order management style you go with, the main rule stays the same. You never risk more than 1% total on single trading management. You can risk less than 1% if you want, maybe a total of 0.5R. But most of the time, do not go over the 1% limit. How you split your orders really depends on your quality of the trading setup. If you are feeling unsure, a little bit confused with the setup, or not fully confident, just lower your risk and split your order into smaller pieces. Yeah, you might take a little less money as reward, but you will protect your account, and that's what really matters in trading. Okay, people, this is it for today. Please take care and see you in the next video. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.